Well, competition's heating up amongst the banks to attract term deposits as they work to reduce their reliance on the wholesale funding markets. And with the government pretty keen, from all accounts, to support the fifth pillar, we've also got the new Basel III liquidity rules. It seems the bank's deposit war is set to continue, and it might create an opportunity, of course, for investors. We're joined by Mark Todd to find out about that. Mark joins us from FIG Securities in Brisbane. Mark, just bring us up to speed with the latest activity, which I understand has been quite frenetic in that term deposit market.
Morning, Brooke. Hard to believe, but the cash market's quite exciting at the moment. We've seen, it's normally quite a quiet place. People just want to lend some cash. But at the moment, we've seen a lot of activity. We've seen the government, as you mentioned, coming out with the fifth pillar support. The fifth pillar would be, your viewers would know it as the regional banks. It'll be the building societies, the credit unions. So the government's come out in support of that. At the same time, the Basel III implementation from APRA has kept the banks on their feet. It's very hard to work out how this implementation is going to take place, so there's a lot of activity there. And then we have, as you've just mentioned, we're at war. We've got a deposit war as per what the four majors are describing it.
Yeah, and it's almost a war between the retail or the retailers and the banks at the moment, because everyone wants the consumer dollar. But in terms of the rates that can be achieved, where do you expect are the best rates for people?
I think it's going to be in the longer duration, the 1 and 2 year part of the curve. The Basel III implementation has been, they've encouraged the banks to try and extend their curve. Instead of borrowing for 30 days, they want them to go out for longer, so it's a much more stable source of funding. So the banks are encouraged to go out for 1 year and 2 year. I think a little bit further, it's very hard to see investors wanting to invest their cash for greater than the 2 years. So we're seeing some pretty good rates in the mid-sixes in that 1 and 2 year part of the curve for some pretty good credit.
Okay, and so in even more detail, how do investors, practically speaking, take advantage of that then?
Term deposits is a pretty simple process. I mean, we don't want to advertise FIG, but we're obviously very keen to advertise FIG. But you go to your bank and you say, I'm looking to invest in a term deposit. They'll give you some rates. These things get published all over the place. You can go to your financial planner. They'll have some rates. You can go to the bank directly and ask them for their rates. Just look at the rates and sort of go back and get the advice that you need to fit for whatever duration you're looking to invest for.
With regard to the government, which you mentioned earlier, and the efforts to create the fifth pillar, we had maybe that nice photo moment of the Treasurer going to the credit union and opening up an account. How do you judge?
With his money.
With his money, yes, no, that's fine. How solid is the commitment, do you think, from the government? That was a nice photo shoot, but behind that, how solid is that commitment to try and encourage the term deposit market, do you think?
Well, I think they're doing a fairly good job. They've got some symbolic issues, as you've just mentioned, but also the government's, in some respects, acting as a spokesperson for the industry. I don't think governments anymore want to pick winners, but they like to pick an industry. And so I think they're making some fairly good points. That industry is governed by APRA. And the four majors are governed by APRA. They report, that's the regulatory environment we work in. And so I think the government's made a good point. If you're going to a building society and it's regulated by APRA, bringing that to everyone's attention on the nightly news is pretty helpful for those institutions. And then they made some potential legislative changes. At the height of the GFC, they brought in a deposit guarantee insurance scheme. So they said if you invested $1 million or up to $1 million, the government would guarantee that deposit scheme. Now they're going to make that a permanent fixture. It was to be amended in October of next year. They haven't agreed on the $1 million amount, and we would make the case that $1 million is the right number. We think there's good grounds for that, but they will come back in the new year and talk about what sort of dollar amount they're going to support.
Why would you support that $1 million mark? What are the grounds for supporting that?
Yeah, well, it's the give and take scenario. If they said $1 million was acceptable and then they take it back, I think people will say, well, why would you reduce it? You've got to make the case for a reduction, and that's a harder thing in this political cycle, to make that reduction and say, well, it's still a very good deal. So I would make the case that if you have APRA, and I'll be honest, we go and see these ADIs as much as we can all over the country. If you were to talk to them, they'd say APRA are with them all the time. They're constantly, that's one of the first questions we ask. The APRA involvement is high. So if you're making a $1 million commitment, the government are making a $1 million commitment, you want to have APRA doing their job, making sure that that's safe. I think it's good public policy.
Can I just finish off with you, Mark,
Sure.
talking about the Well, the year of 2010, and as you said, it's not often that you get an exciting time in the term deposit market, but you've got that right now. Is there a defining moment or a key story or a segment of 2010 that you look back and say that was really what probably 2010 would be remembered for you at FIG there?
I think it was the banks looking to the retail deposit market and targeting that market as an investor segment. I mean, I think the retail deposit market had been neglected to some extent. And so not because the banks are great people, I'm sure they are really great people, but the reality is that they turned and looked at what was happening in Basel III or potentially what would happen, and they said, we need to win that retail deposit space, and so they made some efforts to win that. With that, the retail depositors went from being in highly liquid assets, they just wanted to make sure their money was safe, whether it be under the bed or in a cash account that they could get to straight away, to actually accepting some longer duration. So they started to move out the curve, whether it be 6 months, and then they're now looking at 1 year. So it made sense to us to say that the defining moment was banks approaching the depositors, the retail space, and trying to market and pitch very heavily for that space.
And so that's a turning point. I mean, they will continue to do that in the future, you believe as well then, and you've mentioned Basel III, of course.
Yeah, no doubt. I think they've, I mean, the banks are complaining about the cost of their retail deposits, but I think they can see the benefit if they can win over the hearts and minds of the retail depositors. There's a range of other businesses they can do with them, and so I think that they'll see that as an ongoing cost of doing the business and being, you know, compliant with what APRA is looking to do.
Fantastic, Mark Todd. We appreciate your time there from Brisbane today. Thank you.
Thanks. Take care. Bye bye.
Mark Todd from FIG Securities. And still ahead in Market Express, New Zealand's economy took a tumble in the